Hello, dear community. Welcome to our weekly episode of One Change a Week. Today we have invited Heidi Lindvall from the Swedish VC Pale Blue Dot, which closed in April a 87 million euro fund and is one of the leading climate tech funds in Europe. And we are super curious to talk with you, Heidi, more about the details, in which startups you are interested, in which startups your fund is also investing. And I'm also curious on your opinion on this topic, Markus. You are our sustainability expert and also the founder of the Viennese impact startup Inoco. I just want to go straight into the deep dive questions, but maybe you can pitch also like your VC. So what you are looking for, and maybe you can also talk about this closing, about the 87 million euro.
Sure. Well, thanks so much for having me, first of all. Pale Blue Dot is an 87 million euro fund that, like you said, we closed last March actually, and we did a first close last June. So we're almost a year old, and I'm very excited to kind of have been operating for almost a year now. So we are a ClimateTech-VC. So we invest in climate tech startups around Europe and US. We generally do pre-seed and seed stage. So we invest tickets between 200,000 euros and 2 million euros. And the way we look at climate tech is actually investing in scalable tech companies that do something positive for the climate in any sector. So it's really important to kind of see the distinction here with more kind of clean tech or things that people often think about just renewable energies, for example. But for us, climate tech is a much wider space. I mean, we look at fintech, we look at food and agriculture, we look at mobility, we look at fashion, logistics, supply chain, etc. So it's a very wide area that we invest in. And like I said, we've been live for almost a year now. We have done 11 investments to date, and we will be doing about 20 more investments in the coming 2-3 years. We're all three of us partners who started the fund, are kind of entrepreneurs ourselves. We've all built companies ourselves. We've also all built kind of accelerators and other support organizations for entrepreneurs and have been investing previous to this. So myself and one of my co-founders, we run a microfund together, and our third co-founder, Hampus, was working at the VC previously as well. So we all have pretty similar journeys to kind of get to where we are right now. If I kind of go a little bit into fundraising, so we raised the fund very, very quickly. We were very lucky to be able to do so. From start to finish, it actually took 18 months for us to close the full fund. So it took about 9 months for us to do our first close, which was 53 million euros, and then another 9 months to kind of do second close. And we were definitely new to this. We didn't really know anything when we first started. It's kind of like a startup going out fundraising, trying to realize that how do you do this? What kind of decks do we need? People said, oh, you need a PPM, and you need this, and we had to Google what are these, and what are the questions that we need to answer. But we very quickly were able to establish a cornerstone investor who is actually an investor that we had known previously who had invested in a microfund. So once we were able to get them on board and they actually were providing the first 20 million euros, it was much easier for us to move forward. And we came out at a time that a lot of people started looking at climate, but there weren't really a lot of climate funds out there, specifically in kind of climate tech sector. Of course, again, there were the clean tech. There were a lot of funds or kind of clean tech, green tech, where people weren't really sure if that they're VC fundable. So there really kind of was a gap in the market for us. So we came at a really good time and just kind of reached out to everyone we know and told everyone we're raising a fund and trying to figure out who we should speak with. And we kind of just went from there. And somehow we ended up getting to the right people and getting the fund together in a very, very short timeline.
It's interesting because you mentioned the definition of climate tech. So maybe you can tell us the definition again, because you have a brighter scope. Huh? So what's climate tech and what's not a climate tech?
So for us, climate tech is essentially a a highly scalable business that uses technology in any sector for something climate positive. That's the kind of short definition. How we actually look at them into 3 different categories of companies. We look at companies that reduce the effects of climate change. We look at reverse, which is more like carbon capture, sequestration, actually pulling carbon out of the atmosphere. And then we look at prepare for a new world, which essentially is saying that some of these things are happening now, whether we like it or not. So we have to change the way we live, and we have to prepare for a new reality that's coming. So those are the kind of 3 sectors. And that's why it's pretty vague for us, because we don't think it is just about removing carbon from the atmosphere, for example, and it's not just about consumer change. It's not just about one thing. Climate change affects us in so many different ways. So we have a pretty wide approach to the topic. And then, of course, there are other funds, for example, more traditional clean tech funds have previously focused more on just renewable energies, for example, but sometimes those are a little bit hard for us to do because they tend to be high capex, some are very research heavy and aren't so easy to do within the VC timeline. So we have a 10-year fund, and we have essentially the next 3 years or 3 to 4 years to make all of our investments, and then we have kind of the next 5 years after that to kind of exit all of our investments. So that does mean that we're a bit restricted to what type of deals we can do. And if they're very research heavy and they're going to take a really long time to get to market, or we think the market's not going to be here within 10 years, then of course it's hard for us to invest in those spaces. So that's kind of how we try to have a bit of a distinction with kind of climate tech and clean tech, green tech, environmental tech, and the others. But it is a new term, which means that a lot of people are using it a little bit differently. But that's how we define it right now.
And you are invested in startups all over Europe so far?
Yes. So yeah. We've invested in 2 startups in US as well, but the other 8 are all over Europe, or other 9 are all over Europe.
Yeah, Markus, you as a sustainability expert, so what's the overall goal from VCs, or which impact VCs have also in this climate transition?
I think we can rephrase the question and say, what role have startups in that space, and how are VCs supporting those startups? We see a massive need for change and for disruption now, because a lot of industries in a lot of different sectors, be it transportation, energy, be it food and agriculture, be it circular economy topics, need to change the way they do business in a massive way. And our viewers know that very well, because we have very interesting startups here as a guest who are dealing with those topics, from alternative meat topics to complete broad scale of topics that needs to get done now. And many of these players that need to change now are very old traditional companies who have done business the same way for decades. And they are not going to be able to make that transition on their own, but they need to, because they feel the force by politicians, by consumers, by their investors, to basically decarbonize their entire business models in a very, very short period of time. And there's nobody else better, more suitable to make that transition happen than startups, because startups are those speedboats who can really, disrupt things as they are at the moment, and really bring that change to the world and to those industry in a very, fast and unprecedented way. And this obviously means a massive opportunity for investors, because lots and lots of these startups will become the next Tesla, or, it doesn't have to be Tesla, but there will be a lot of unicorns coming out of that space. And this is obviously a super exciting space to get active from the perspective of an investor. Therefore, I'm not surprised that you were able to raise your fund at that time in such a quick time, but obviously still amazing result. And VC obviously needs to fuel that growth, and VCs need to bring in the network, need to bring in the capital to really allow startups to do their thing, because many of these startups require quite some capital to hire the smartest talent, to build the coolest technology, to really contribute to that goal, to keep our emissions down so that we can hopefully achieve this 1.5 degree goal that we're all looking at, or at least the 2.0 degree goal that we all hope to achieve. And that's why VCs have a super crucial role in that space, and we'll have a very exciting time in the next couple of years for sure.
For sure. Heidi mentioned also the definition of climate tech. You share the same definition as Heidi, or?
Yeah, I mean, I think where I totally agree is that everyone is using a little bit a different definition, but it doesn't matter, as long as
it matters how you measure your impact, no?
Yeah, that's absolutely true. And that's obviously also an interesting question later for you, how you measure the impact of your startups. Because obviously also from an investor perspective, there is a certain temptation to maybe go towards greenwashing and to maybe fund attractive business models that sound like they're cool from a climate perspective, but actually don't have a lot of impact. So I think that's a very interesting follow-up question also to you, how you do that. Just to sum up, one thing that's really interesting to see also in the space is that last year about 17 billion US dollars were invested from VCs into the climate tech space. And there was a lot of growth in terms of the capital invested into that space. And that also shows that there is a lot of money out there for cool startups who really are working on solutions that have an impact. And as Heidi said, and that's the very important thing about it, that are really scalable and that you can scale around the globe. Because VC model obviously requires startups to be scalable and to be able to reach, hundreds of millions in revenues, ideally.
That you get also in VC case. I mean, this is a really important question. But let's come to the other question. So, how you measure impact? What you have? What criteria you have?
So it's a great question. It's something that we talk a lot about, how you do that right, because it's very complex. So we invest at pre-seed and seed stage, which means that they don't have a lot of impact yet. And we talked a lot about whether we should measure impact by just carbon emissions. But what we found is often what that becomes is kind of a back of a napkin calculation of if you would do X, then we would have X. And then there's so many different ways of calculating that we didn't actually think that it was accurate enough. So what we've ended up doing is having a very qualitative approach to impact. So with every company we invest in, we set up KPIs together with them to think about what is actually measurable at the stage you are in at the moment. And that means that they all measure different things and we report different things to our LPs, but we report something that's accurate for the stage that they're at. So for example, we have a company called Overstory, which essentially they use satellite imagery to measure forest and vegetation and works together with utility companies, and they can help them prevent forest fires, for example. And for example, they can actually say, this is the area of forest that we have monitored, or these are the amount of forest fires that we have prevented. Then we have a company called Hack Your Closet, which is a rental subscription company, and they can essentially say the amount of CO2 saved based on people renting clothes instead of purchasing, for example, or the amount of clothes cycles that have been extended instead of these clothes being incinerated by the brands, which is often what happens to kind of overstocks of clothing, for example. So for us, it's very qualitative right now. There might be a time that our portfolio is a bit more matured, or the companies have matured a bit, where we do try to standardize it more and say that we are going to figure out how to calculate carbon emissions in the same way for everyone, for example. But at this point, we just felt like it was almost a bigger risk that it becomes greenwashing if we say that you have to fit into this mold, because they are so different. And again, this is also the difference of some of our companies being in the reduce, some in the reverse, and some of the prepare for the new world bucket, that depending on where you are there, your focus will be different. And like the KPIs that you're aiming for essentially will be different as well. So yeah, at the moment, very qualitative approach and not super standardized.
Mm-hmm. But you are flexible depending on the pre-seed, seed, or later stages of the startup. That's interesting. Mm-hmm.
Yeah, I mean, we look at what they can measure at that time, and we also figure out what are the important KPIs for you to measure. Like what is it that will actually move a needle in where you are right now. And of course, we measure this quarterly, which means that we have to see that where can we actually see an impact within this stage as well, and hopefully not just measure things that could be measured in 2 or 3 years, but actually say, what can we measure right now?
But you also have like a business case from an impact perspective, where you say, okay, if we achieve the goal that's defined by our business plan in 5 years to have X million users, X million whatever, what is the impact going to look like in our own KPIs if we achieve that? Do you do something like that?
Yeah, so at the time of investment, we kind of have this full internal scorecard, essentially, where we look at ESG factors. And at that point, we try to figure out what is the impact of this business. And of course, at that point, when we do a bit more due diligence, we try to figure out what is the impact on climate in general in this space, and what is the biggest impact we could see possible. So, but that is more something that we do in order to figure out if this is an area that a climate tech company should invest in, right? So at that point, we have ourselves made our own kind of calculations and given ourselves an idea of whether we think this is climate enough or it's core enough to what they do, and it's core enough to their business model. And then we look at the environmental factors, we look at the social factors, of course, governance as well. But that is for us more of a pre-process, and then after that, it will be working with the founders to figure out how we can measure and report on the impact that they're having. And
did you see cases where you had a startup on the table that looked super interesting and attractive from a business perspective, but in the end you figured out that the climate impact wasn't the one that you're looking for?
Yes, that has actually happened quite a few times. So we have had someone kind of in-house to help us with research and to just try to figure out that is seafood good for the climate, and then we also have to think, is seafood good for the climate compared to plant-based diets, or or compared to what? So we have someone in-house who always tries to help us do these comparisons and try to figure out where we sit on something, because we found that a lot of times it's very easy to say, yes, we should definitely go towards clean meat, but then we're trying to question, but is clean meat better than just trying to get more people to eat plant-based food, for example? So these are the kind of questions that we're constantly asking ourselves. And like I said, we have someone on team who's kind of always working this. We've just hired someone else full-time. We've had it as an internship role before, and now we've hired someone full-time to do this so that we can continue asking these hard questions and trying to figure out where we should be investing. But yes, it constantly comes up that we are not climate researchers ourselves. We are VCs. We've all been entrepreneurs ourselves. We don't come from that background. So we have other people who help us determine where the biggest climate impact is. And then we, of course, make sure that it's a VC fundable space that they can scale to the extent that we need, and that we can actually prove that you can have the same or even better returns from climate companies compared to, non-impact companies, I guess.
Mm-hmm, mm-hmm. There was last week an interesting survey from the Austrian Startup Monitor that 50% of the impact startups don't measure their impact in Austria. Maybe you have also a brighter view about Europe, and are impact startups measuring their impact? Or is it like you find sometimes startups which are, I don't know, they don't care about it?
I actually have a bit of an issue with us using the term, and I use it myself as well, but I have an issue with us using the term impact startups, because I think it's so strange that we focus on a few companies, often like 10% of all the startups, and say that these are the companies that make an impact and they should be measuring what they do. I actually think that we need to move away from trying to figure out that who are impact startups, to realizing that all startups have an impact on our world, right? Then whether it's positive or neutral or negative is what we should be measuring. So I think I think everyone needs to measure their impact. And I think we as VCs should have a responsibility to report on whether our portfolio has a negative, a neutral, or a positive impact on the environment, on people, on the planet, etc. So yes, I think definitely there are impact startups that aren't really measuring their impact, but there are also a lot of startups that perhaps shouldn't be funded, that are getting funded, where no one's really asking the question that is this actually negative impact? And I think that is probably the more important question to ask. I feel like so much focus is on, oh, are these impact startups greenwashing, or are these impact startups doing X? But what about the rest? Why don't we ask questions about them? And what about those generalist VCs? Why don't we ask them what their portfolio looks like and what the impact of that portfolio is? Because I think that's where we really start moving the needle if we start asking those questions.
Definitely, it's a good point. Everyone has impact for sure. I think you have also the same account in our talks with Inoko. But we also want to find out right now, maybe you can give us some advices for early stage startup founders who try to figure out if they are an investment case or not in the climate tech sector. So because there are many early stage founders out there who try out with their new solutions, they have to, I don't know, settle down and get some knowledge as well to become even a VC case.
Yeah, I mean, well, in general, I would say that, like, it's almost the easiest to try to kind of just get into the VC space in general and trying to figure out whether it's a scalable company. Like whether there is a positive impact on the climate is pretty easy to figure out, and that you would generally know. It's just more about trying to figure out that can this scale like any other startup would have to? Can this kind of fit into the VC model? And I think that is, at least for us, where we get more companies that aren't really fitting into the VC model, rather than getting companies that aren't really climate. And that is really about just kind of researching what's out there and talking to other people in the startup scene, making some calculations of how big this can go, trying to understand how fast can this scale. I think there's a lot of great resources out there. For example, Point9 put out these things called SaaS napkins or marketplace napkins, where they actually give you an idea of how fast you have to grow, how much sales you have to have, etc., in order to be kind of fundable at different stages, or giving you more averages of what other people have had, what kind of metrics other people have had. So I think it's more about trying to figure out whether you can kind of fit into those molds that exist. And then if you do decide that this can be a VC fundable company, and you do have climate or some positive climate impact as your core, then we, for example, are very easy to find. We have all of our emails on our website. We have a type form on our website. We don't really want you to need to know anyone in the industry or need to ask for warm intros. We're very approachable, and we want anyone to be able to just come directly to us. So I think that if there is a fit, then we make it very easy to come to us. And if you're not sure if it is a fit, still good to come to us, and we will let you know. I mean, we go through all of our emails, and we go through all of our applications, and we respond to everyone within a week. So, and it would also, the important thing to note is all 3 GPs of us are the ones doing it. We don't have any associates or any analysts or anyone else that goes through the deal flow. We make sure we do all of it ourselves.
You've already spotted some interesting climate tech startups from Austria.
From Austria, we don't have any investments in Austria. We have an Austrian founder running a German startup. I don't know if that counts. But we don't have any investments in Austria yet. But I do think that, for sure, in our deal flow, we will have some great Austrian startups that I'm sure of.
Yeah,
Markus, you still have questions for Heidi?
Yeah, maybe what does your deal flow look like? So how many startups do you usually, how many pitch decks do you get into your inbox every week?
That's a great question. Now, I don't actually have a great answer, which is the worst thing to say, and that is because we haven't really summarized and brought together like who gets what, and we've actually literally last week had the conversation that we need to go through. We started using a new system for our deal flow about 3 months ago now, I think, and we haven't really kind of looked at how many we have in our pipeline. But generally, I would say that into my email, I maybe get about 10 a week, and then I'd say another from the type form, maybe another 10, 15, and then my partners, I don't know how many they get is the real answer. But we have a pretty good deal flow. I would say for our stage and for our focus. And but yes, it's not an easy way of answering it when you haven't crunched the numbers, because a lot came through recommendations as well, and then of course a lot of accelerator demo days and other meetups and stuff. But yeah, hopefully I'll crunch the numbers and get back with a better answer on that.
I'm sure you're going to get a couple of good pitch decks in now from the DACH region after our interview here.
I'm very much looking forward to it.
Definitely. Yeah, Markus, if you don't have any question, we still have two. I think you're going...
Yes, absolutely. We always, at One Change a Week, it's very much about what we personally can do to help mitigate the climate crisis and the biodiversity crisis. And we always ask our guests what they are already doing in their personal life to really reduce their impact, and what areas they still see where there is, room to improve, where they may be too lazy or, it's just too inconvenient to do something about it. And we're obviously super curious to hear what you're doing in your life and where there is still potential left.
Sure. So in terms of what I do, well, one thing I do, for example, is that I'm going to plug, of course, one of my companies here, but I use a rental service called Hack Your Closet, which is what I'm wearing right now, which is a super smart curated box that you get. The stylist has created a box for you with your style, send it home to you every month. And that has reduced my purchase in new clothes dramatically, because it's just so exciting. It's so much easier. I mean, having a personal stylist instead of having to go to shops suits me super well. So that is one thing that I do right now. I bike to work. I plant-based food. I try to recycle, but I'm sometimes a little bit lazy with some of that. I'm not gonna lie. But then there's a lot of things I could do better as well. I mean, I still, well, not during the pandemic, but before that, I still travel quite a bit, because I mean, I have my own family in Finland, my husband's family in London. I have friends all around the world, and I enjoy traveling. So I really hope that we can make traveling easier and more climate friendly instead of having to stop that. And I also, and another thing that I struggle with is I always think that I need to remove the amount of plastic in my life and in my household. And I'm always thinking about other ways of doing that, and looking at, what services are out there or what alternatives are out there, but I just haven't really done it yet. So every now and then I have that moment when I'm just like, oh no, I can't see all the plastic in my bathroom, all the plastic in my kitchen. And yet I'm not really doing very much about it. I mean, I recycle it, but knowing more about recycling, I now know that it doesn't actually end up being recycled. A lot of that ends up getting shipped to another country, even from Sweden. So yeah, that's something I need to get better at for sure. And there's a lot more things I need to get better at, but those are a few.
Then I really know that we, with our app Inoko, need to make sure to come to the Nordics as quickly as possible, so that you can easily, learn about alternative products that have, less plastic, less impact. And by the way, I also would like to invite the entire community here in Austria to join Inoko as a test user. Download the app in the App Store and use the sign-up code Brutkasten21. Become part of the team and see what your impact is with regards to shopping, grocery primarily at the moment.
Lots of gamification there, for sure. Heidi, thank you very much for this really interesting insights. I wish you all the best, and yeah, thank you for sharing your thoughts also on like this climate topic. And yeah, we wish you all the best. Markus, also thank you very much that you joined us today, and all the best to the community.
Pleasure.